Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at Bitcoin and the Bitcoin stocks. Okay, first up is this Bitcoin chart here, and you can see this is the one-day chart, and it's showing that it's up currently nearly 8%. So it's pushing 4,900 here, or 4,400. So huge move for Bitcoin. It's been on this tear. You can see the uptrend has been super strong. If Bitcoin keeps pushing higher, we'll have to see if that can keep sustaining the rallies for the Bitcoin stocks. If you look at GBTC here, Bitcoin Investment Trust, it follows Bitcoin's movement, so you would expect it to keep pushing higher if Bitcoin does as well. But the other over-the-counter stocks are hitting some key resistance levels, so we need to be on the lookout for them taking a breather. Okay, so first up here for the charts is GBTC, and then you can see here it's got 84 on RSI, so it is hitting the super overbought levels. Fasto's at 93, and it did have a bearish crossover. There was another gap up open today, so now there's another unfilled gap on the chart. So this is a chart that we've been working on. So now there's 3 unfilled gaps, and today's candle did form well above the upper Bollinger Band. So if there is a pullback, the first support level is going to be EMA 4 at 635. So keep an eye on GBTC. Notice that there's been an increasing volume pattern. So volume's been picking up as the share price has been heading higher. The candles have been riding EMA 4 support higher. So this is a very, very strong uptrend. You want to see this prior breakout level at 550. If there is a big pullback to fill that gap, you want to see that hold. That would bring the share price down to EMA 13. Right now, Bitcoin is pushing higher, and GBTC is doing the same. Okay, let's look at BTCS. Okay, it had a very nice move today. It closed up 105%. This was pushing RSI all the way up here to 91. So RSI is getting hitting very frothy levels. If you look at prior run here, you can see that this is hitting where it peaked on a prior run. So it's very overbought. It's got a pullback from 80 on Fasto. Now it's down here at 68. So Fasto has corrected. ADX here with plus DI, it's gone parabolic. You can see it's shooting straight up. A long upper wick did form on today's candle, so there was a big pullback from a high of day up here at 58, and that did pull the share price down here to 42 for the close. The close was well above the upper Bollinger Band. Notice the close also was above the key resistance level that we were looking to break, which was back here on this March 2nd close. And so that's at 32. So that is a key level on a pullback. And then it also ended up breaking another key resistance level. You have to go all the way back here in November. And there was this high close back here in November. And there ended up being a close above that level today as well. So on a pullback, the first key level to hold is going to be 37, which is the closing price back here from on the big November run. And then if that breaks, then you're looking at 32, which was the closing price on the peak in March. And then if there is a big pullback, there is a gap down here, all the way down here to 23 cents. If the share price dropped down to 23 and tested the 300-day simple moving average, which is this blue line currently at 23, that would fill the gap. So always keep an eye on a gap fill if there is if the share price does start pulling back and the candles start working back into the bands. Notice there was a giant volume spike today, so volume has been increasing, and so this is looking like this could be a climax spike. So we need to keep an eye on it. When you have a multi-day run with a giant volume spike and then a big pullback from high of day, many times the share price will pull back. Notice that MACD line down here is completely vertical on both time frames. So that is an unsustainable trajectory. And if you want to see an example of that, you can just look at the last two big runs. So look at the November run. It had a very steep trajectory like the current run, and then notice how MACD was completely vertical, and so that's very similar to the perpendicular, to the very vertical line that's created on this run. And then the same thing happened on this run as well. But the current run is more dramatic, like the November run. So yeah, so keep an eye on BTCS. If you look here at the weekly chart, okay, so when the stock is breaking out, we like to look at the weekly chart to see where the next resistance levels are. And if you look here, the big resistance level to close above for the week, because this candle will not set until the closing bell on Friday, is this high close back here in November. So you want to see, if you're a bull, a close above that level, and then the next key level to break is back here in this resistance from back in June of 2016. Notice the upper wick hit that level and pulled back. So that is a crucial resistance level. You know, that was the high today, up there at 57. So you know, that is the key support. You know, that was the key support level back in June. So now that's acting as huge resistance. So notice that there is a gap between the two candles here, the high of day from last week and the low of day from this week. So you could see that gap fill if there is a pullback, and that could happen, and the chart could still remain bullish. You know, it's just the you know, share price has been breaking out and it's on a super strong move. So going forward, what bulls want to see is they want to see a close above that 57 level for the week. And then that's going to be a very strong move. And then if it can get up above this opening price up here, just above 75, then you could see a potential run up to Dollarland. So yeah, but yeah, first things first, it needs to close strong for the week. Keep an eye on the 15-minute chart. If that starts to break down, that could signal that the chart, that the share price is going to pull back. Okay, so let's look at BTSC. So we just looked at BTCS, and then BTSC is hitting a crucial resistance level as well today. If you look here on the daily chart, it's bumping right up against this June 5th closing price. So that's at 14.5, and so notice how it closed right below that level today. So it's essentially formed a double top at that level. If it fails to close above that level going forward, then you can see the share price pull back. There is a gap between these two candles, so you could see that gap fill on a pullback. And then also, you know, notice how today's candle is forming well above the upper Bollinger Band. You know, the candles could work their way back into the bands, and the EMA 4 would be the first support level down here at 11. What bulls really want to see this going forward is they want to see this middle Bollinger Band and the 50-day simple moving average at 0.08 hold. Okay, so a close above 14.5 signals more upside potential. Fail to break that level, and you could see the gap fill and 11 tested. Okay, so yeah, this has been a really nice move. It just looks like you know, it has to break resistance to head higher. If you look here at BITCF, there was some after hours news. They were commenting on their extreme rally that they have. Didn't realize it, but their market cap is extremely high right now. Yeah, and so it looks like they don't have their quotes right now on OTC markets. So basically, this after hours news and statement from the company stated that they thought that their share price was overvalued, and they also commented that their peers were overvalued as well. So you know, that could be a big red flag for all these Bitcoin OTC stocks, and a signal to the bears. It looks like BITCF should be under pressure tomorrow due to the statements from the company. It could even have a gap down open. You know, we just have to see how this plays out. You just never know. There's no after hours or pre-market trading for over-the-counter stocks, so it's hard to tell what's going to happen before the open. But yeah, the news did not look good. It's never good when you know, just did not seem like a good scenario here. If you've been following our charts, you'll see that BITCF has a bearish 3 gaps up reversal pattern from a couple days ago. row. Now there's 5 gap ups in a row. So you know, it's gapped up 5 days in a row. Today's candle is forming, you know, did form above the EMA4 and the upper Bollinger Band. EMA4 down here at 168 is the first support level. So that is the first gap to fill. There is also, so you have a gap to fill right here between these two candles, you know, down to about 170, just a little above 170 fills the gap. And then if you come down here, there's another gap to fill. So yeah, yeah, it's difficult to tell with the lower wick. But yeah, just keep an eye on BITCF. If EMA4 support breaks, it's been holding during this entire run. That's going to be the big signal that it's no longer in play, or that it's cooling down. And then you could see a big drop down to EMA8 at 120 and possibly the dollar level tested. If you look back here, the closing price back in April on the 18th, that's going to be a big support level. That was the previous top. So that's at about 75. So we just have to see how this plays out. Notice how it was increasing volume all the way into the big push today. There was a pullback off of high of day. It pushed really hard into the close and then pulled back. That created the upper wick with the big climax spike. So we've been looking for a climax spike for the last few days. We thought that the climax spike was going to be back here on this huge volume bar, but two more large volume bars that followed on Friday and Monday. And then now look at MACD. MACD was, you know, I commented before that it was very steep on both time frames, and this is unsustainable. Well, now it's just completely vertical. So this is super unsustainable. Yeah, so it looks like, you know, when you start seeing that trajectory, just keep in mind that that it cannot be keep heading at that trajectory. So if you look here at the BITCF 15-minute chart, you'll see this is showing you the entire run here. So it started back down here on August 7th. We put out alerts down here at 40 cents, and then it broke out higher. Notice how it's been holding the middle Bollinger Band the entire time. The middle Bollinger Band is the dotted purple line that's currently at 243. So if you see a drop below 243 tomorrow, that's going to be your big red flag. I mean, it got tested back here and it held, but a drop below, it's gonna signal that it's no longer in play, and you could see a drop down to the 50 simple moving average at 188. If that breaks, you have the 100 at 133, and then if that breaks, you've got the 200 and 300 all the way down here at 70 and 87. So it just depends on how hard they attack this tomorrow. We'll just have to see how it plays out. To the upside, it has to break the high of day. You know, it just seems highly unlikely that this is going to have a good day tomorrow with the news after hours. If you look here at but you never know. You never know in OTC land. So I don't want to assume that I do know. Just have to follow the charts. If you look here at the ascending triangle pattern that formed intraday, we noticed that pattern was forming, and then there was that break at 2 o'clock above the horizontal resistance line. That signaled a breakout higher. So that was the big breakout level, and then notice how it's lined up with that middle Bollinger Band. So, you know, a break below that is going to be your big red flag that the stock is under pressure. Okay, so look at MGTI. Okay, this stock had a big move today. And notice there was a gap up open, so that you know, had this you know, closed up today 33%. It had the giant move, and above the 300-day simple moving average at 163. That's the key level to hold on a pullback. If the 300-day simple moving average breaks, you could see the gap fill. There's a gap between high of day on Friday and low of day today, and so a drop down to about 147 would fill the gap. So keep an eye on that if the 300-day simple moving average fails to turn into support. This is on the second day of this current run. Notice there was a big volume spike today. MACD, notice how the trajectory isn't as steep as the other two. This is just getting going. We'll see if it can keep pushing higher. It is at overbought levels on Fasto at 97 and at 77 on RSI. If you look here at this longer term chart here, if you look out back out here to the gap that formed back in October, you'll see what's going on. It broke above the bottom of the gap level. That's this horizontal resistance line. So the gap up to open today was above the bottom of the gap and the 300-day simple moving average. So you know those are two big levels to turn into support. So if that bottom of the gap level, that's the gap that's created back here between low of day on this candle and high of day on this candle, then that would signal the gap fill. To the upside, the gap will fill at about $2.15. That's the top of the gap here. So when 215 hits, if it gets hit, that would be a gap fill. And many times when there's a gap fill, that's a climax, and you see a temporary top. So we'll see if that happens here or if it can push higher. That will be the key level to turn into support to the upside. Notice that volume is picking up. There was good volume today, the best volume since back in May, and yeah, and you know, MACD does look a little steeper here on when you pull it out a little further, but you can see that it is just starting compared to the other runners. If you look at GAHC here, it formed you know, it had closed up 13% today. It had a gap up open. It's on a multi-day run here, and it closed above the 50-day simple moving average on Friday at 0.0243. We want to see that level turn into support today. Bearish doji star reversal pattern formed, so the gap up open in doji forming above the upper Bollinger Band is signaling that it could possibly pull back into the bands. Okay, this is the pattern, bearish doji star. You know, this you know, the open was at 0.036, and the close was at 0.0357, so it was just off by it was very close to being the doji. So yeah, this is considered a doji, and so it is a red flag, and just keep in mind when dojis form in uptrends, many times they signal pullback could be coming. So yeah, if that happens, you know, what you want to do is you want to watch this 15-minute chart, and as you can see here, the share price actually broke support at about 1245 here when the middle Bollinger Band broke on this 15-minute chart, and then the middle Bollinger Band currently at 39, that's this dotted purple line, turned into resistance, and so that was signaling that there's possible downside risk here, and so it's holding this 50 simple moving average at 0.034. Okay, that's the green line here. That's the key level to hold. If it breaks below that, you could see a big drop down here to the 100 simple moving average 0.028. So right now it was a red flag with the close below the middle Bollinger Band. It's holding the next key support level. It's got to stay above this green line to head higher. Okay, and let's look at SING. Okay, the other stocks were Bitcoin and blockchain related, and SING just came out. They're cryptocurrency related. They just came out with the weed coin. So they're trying to service the marijuana industry, and so we'll see if they can pull it off or not. You know, there was a recent pot coin, so this is not something new. If you look here at the breakout, so this is on a multi-day run, it formed a pattern that we just talked about earlier. It formed, you can see there's 1, 2, 3 gaps in a row, so it formed a bearish 3 gap ups reversal pattern. So now the key is to be the lookout for a red candle or the share price hitting resistance and pulling back. The upper wick on today's candle did hit the key resistance level, which is back here in February. You could see the high close back here in February, so basically at 12 cents. If it can't break above and close above 12 cents, then you can see the share price pull back. This candle did form above the upper Bollinger Band, so it was a really frothy close. If you look up here at the RSI, it's all the way up here at 84, so it is hitting the previous levels where it pulled back from. Fasto is thrown off because of the long upper wick, so you can't really look at Fasto right now. But yeah, this is looking like, you know, it could top out here at 12. It's got to get above 12 to keep running. You know, you've got the giant volume spike here, volume spiking hard, and on a pullback, what you want to see is the EMA4 at 0.07 hold. The candles have been writing EMA4 support during this run, so as long long as that level holds, the chart is still very strong. If that breaks, that's when you could see possible further consolidation and a possible test of EMA 8 or maybe even EMA 13 down here at 0.05. So keep in mind this is on a 4-day run, and that's and it's hitting resistance, so it could possibly take a breather. And then the last one to look at is the worst of breed, SWHI. It did formed a red candle today, but it did close again above EMAs 4 and 8, so it's still technically in play, but it's a very risky trade, very thinly traded, not recommended, but we're just keeping an eye on it to see if it can get moving. It needs to break 0.0015 resistance. And as I close here, in closing, you can see here Bitcoin is now at 4409 and it's pushing higher, up 8%. So you never know, they might gap these stocks up higher in the open tomorrow. We just have to see how it plays out. Just follow those charts. Okay, thank you very much. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis.